The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 11th fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in right now, 877-927-6648. If you can't dial on in, you can always send me an email, steve@tfnn.com. Inside that subject heading, please just put radio show question. And then, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 51 points at 21,895, about 0.25% to the upside. S&P the same. That's up 7 points. The Index 100 up 0.8%. That's trading out at 58.36. Russell 2000 is flat. Semis are up 0.6% or $6 out here. Gold is up about $3. Silver is flat. Light-sweet crude is flat. Leading the charge here to the upside is Intuitive Surgical up $12, 1 3/10%. Amazon is up $11, about the same percentage-wise. Priceline up 0.5%, $10 to the upside. Mercado Libre up 3%. Eagle Pharmaceuticals is the big percentage gainer, up $5. To the downside, you've got Luxoft Holdings down $14 or 23%. That's a little stinker. And Nvidia Corp down $9 or 5%. Charter Communications off 4. Simon Property Group down 4. Black Box Corp down 3. Dillard's up $3 out there. So where do you want to begin with? I know we've got some VIX questions, and we'll go into those here. Let me go into those kind of as we take a look at what are the markets doing right now as of 1:09 in the afternoon? Well, East Coast time, of course. We're kind of at an interesting point here. First, let's just kind of backtrack. We know that each of you knew that the market was going to at least bounce today, right? Everybody raise your hand if you knew at the close yesterday that the market was going to bounce. No matter how dismal, no matter how bad everything looked, raise your hands. And I see everyone out there. I see a couple of you are not raising your hands. Now, you knew that it was going to happen, right? Just simply because of everything that went on inside that volatility index. We know how that works. Now, the question becomes, is it a bounce or a bottom? And right now, it's just a bounce. But let's take a look at the NQ, and then we'll go look at the ES, which will have more of a bearing on the VIX questions out here. But the NQ, now this is the 30-minute chart. Price moving lower, doing less relative energy. We were looking at that yesterday. The reason why we have the 30-minute chart up on my screen is because we're right now at that point where we can see the price oscillator, bottom panel of my screen here, is really just crossing above the zero line. Now, what that tells us is that we're eventually going to see Stevie's red line and price catch up to each other. Now, I don't know if it's a combination of a pullback and that difference between those two exponential moving averages and so forth moving higher. That's likely to be the case. It was interesting out here. The move off of the bottom this morning, we did get to a TD setup 9 count. This is the, let me get my crosshair out here. This was going on at about 12:30. Now, the interesting thing about that bar was it clearly was trading inside bars 5 and 6. Now, that is a message of, hey, slow down. It's like you're driving, in those old days, you used to have your CB and you'd listen and they'd tell you where the Smokies were at. In this case here, it's saying there's Smokies ahead. In this case, Smokies would be sellers, so just kind of be careful. Now, I don't know what's going to take place over the next couple of heck, I don't know what's going to take place in the next minute. I know that there's going to be a meeting of these two. And the NASDAQ, the NQ, is the first one above the price oscillator at the bottom portion of my chart. The ES, the YM, TF, they're not there just yet. And so at this stage here, should it occur today, which it could, should occur today where we see price pull back and test Stevie's red line and then bounce off that like a little trampoline, we've got higher to go. You would say, how much higher, Steve-O? And Steve-O would say 58.90 easily would be the next target. You're at 58.37. That would be a good move, right? That's another 50 points to the upside. Do the two have to meet, soon? I don't really think we've had any short covering yet. It doesn't look like that to me. If we did, we would be much higher in the marketplace than where we are at the moment. So the most important thing that I can share with you about the 30-minute chart is that was to watch what happens with Stevie's red line and price out there, because that's going to be the big clue. Be the big clue at the end of the day, or be the big clue on Sunday when trading opens. What happens if price goes ahead and closes below Stevie's red line? That would be very bearish. That would then say, hey, you're going to go back and at least revisit at least 57.85 as we speak right now. That's the bottom of the 30-minute profile out there, and perhaps even lower. So that would be the bearish side. Now, the nice thing about the different multiple time frame charts is you like when they both identify tops or bottoms out here. In this case, on the 2-hour chart, what we can see here is, for those of you that are aficionados of that 7th wave move to the downside, of the A to B equals CD pattern to the upside or downside, in this case to the downside, and of price moving lower with less relative energy, well, you had all three of those come together. You got to like that, especially when you're anticipating that a bottom is forming out here. You see, you've got wave number 7. That's Stevie Wonder, or the NQ 120-minute chart, singing in the key of G. That is price moving lower, doing less relative energy. It took until we had that nice big old wide-ranging bullish engulfing candle form out here earlier this morning. And in this case, what this communicates to you and I, it's only the first leg to the upside, and you're inside its 2-hour time frame box, meaning that it's given us a target of 58.83. So you got 58.83 there and 58.90 on the 30-minute time frame chart out there. Now, the market could get there really quick if short covering starts by the end of the day out here. Because for those who decided to jump on that train, believe that it was going to the South Pole yesterday, were not paying attention to the one-day rate of change inside the spot volatility index, let alone what it's done over the course of the last 20 days. That's our segue when we come back from this break to go try to answer the question for folks out here that are interested in understanding, hey, where is the VIX headed to? Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com, and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 51, S&P is up 7. So let me go back here. The questions that came in through the Tiger's Den out here. First question was really from Bob in Spokane, asking about the VXX, and then some discussion as well between Mike and Bob, and two related questions. Phil follows the Bollinger Band buy signal approach of the daily VIX chart, and says a close under about 13.95 would confirm a buy signal. Buy signal in the VIX, buy signal in the S&P 500. I'm not sure which buy signal. Similar to your spike system. And two, you said 24 to 48 hours, I think, to get a bounce. So we are on track. Per your thinking, that is correct out there. No, I don't use the Bollinger Band that way, so it's going to be hard for me to really do that. But let's try to answer those questions, and if I don't, repost something in the den so that I can get to your specific question. Now, first, with regard to the VXX, I'm kind of doing this out of order here, but I want to at least get those numbers. Let's see if we can do this out here and get some market profiles for you. And you're gonna be looking at 60 to 40 daily and weekly. You don't really give a hoot about the weekly. And to a certain extent, you don't give a hoot about the daily. 240 sounds like a long time, right? So that's probably not what you want. Let's just do this for you, especially because I know we might have Tom that's trading out there. He likes to trade these vehicles. If we just take a look at the short-term futures ETF, VXX, here's your 10-minute profile. And this tells us that your range here for this product is between, the box is between 1298 at the bottom, 1340 at the point of control, 1348 at the top of the box out there. So it's not telling us right now, hey, where are we headed to? Even if I put this on a 5-minute time frame chart for you, it's not really, it's suggesting a bit lower out here. But when I take a look at all the prior boxes, we're not getting a huge amount of information out here. So from the shorter time period standpoint, for those trading this, 1348 is where there should be some significant resistance here at 1312. Below 1298 says it wants to trade lower. Where to? Well, then I'll just go to the 240-minute chart. It says 1253 at the point of control. So that's, and I have not traded this vehicle using these market profiles to be able to tell you whether that's going to get you to the place you want. Look, they are useful. And you know that you've got this bearish structure here because above 1348 says you've taken out, that's a 10-minute time frame, by the way, that you've taken out a significant level of resistance and, you're headed higher. How much higher? I don't know at this stage. I don't see that as clearly on this. Back to the highs out here at 1405 at about 2 o'clock. This morning is what I would say out here. Now, let's try to restitch this back together, right? And taking a look at the S&P, the ES Mini. And so we looked at the 30-minute chart. We began looking at the NQ. Let's take a look at the ES 30-minute chart. You'll see price moving lower, doing less relative energy. At about 8 o'clock this morning, you had your hammer candle. Very next session, the bullish engulfing. So the market communicating to you the way that it's supposed to. It gives you these reversal signals either at tops or bottoms. So either at selling points or at buying points out here. This is not rocket science. It just isn't. It's probability science. You trade these patterns, you just realize could it really be this easy? The answer is, yeah, if you take your emotions out of the game, it really is this easy. Now, the NQ has had energy in it, whereas the ES hasn't. We don't have any Tom DeMark setup 9 counts out here. We've been really sideways. We just have a TAS market profile on a 30-minute time frame. I know that this is solid. That says a move above 24.46. You're headed to 24.65. A move below 24.38. It's ugly. It says 24.35 at least. Maybe go visit the bottom of that hammer candle at about 8 o'clock this morning. And the reason why we can say that is because you see that price oscillator at the bottom of my screen is still below zero. So any move below Stevie's red line, and then we'll just say that combined with the move below the TAS profile on a 30-minute chart, it just doesn't get you a more bearish message on the short term. That's the 30-minute time frame out there. So that being said, well, you know what? Let's go over to the ES Mini out here. Let's go grab you that data as well. Here's your 30-minute chart. And so in theory, you know the difference between practice and theory, right? Or practice and reality. I can't tell you that joke, but for those of you that know it, it probably brings a smile to your heart. The ES Mini. Let's get back to business out here. The ES Mini. Watch 24.46. I think that we gave you that on the other chart out there, because if it closes above that, that says we're headed higher. 30-minute top of box is 24.46. 60-minute top of the box, 24.46. 24.42, where we're trading right now, is the center of that box on the 240-minute time frame chart, and this does have a bullish structure to it. Now, I wouldn't get too overly bullish just because it has a bullish structure. The work has to be done on that 30-minute time frame to convince you or me that it actually wants to move higher. And if it does, then the move here would be up to about 24.61. That'd be a nice, healthy retracement out here. It is not unthinkable. It is not inconceivable that this could happen. I'm going to go back to the VIX in a moment. That 0.618 is at the 24.66 level. So you got 24.61, 24.66 to the upside. Downside, Lord, no, we could try to figure that one out, but there's not a lot of downside support, at least profile-wise. Well, there would be on the weekly time frame. So here, what would that actually be to the downside? On the weekly time frame, it would be the top of its box at 24.02 out here. You know, all this price movement for this week, so I blow this chart up, no trends have been broken. None. Zero. Nada. And in fact, there's just a real short-term trend off of the May 15th bottom that is being tested as we speak right now. You close here, and you, in essence, held a really short-term trend line out here. So that's on the ES. So I get back to the VIX. because I don't think I punched this chart up. This chart here is really important, especially for those of you that are trading this vehicle when you get days like yesterday and days like today and this morning, depending on what you're trading, what time frame. As we look at this right now, what we can see here is we can see the spot VIX index trading at 1467. This morning, the spot VIX index was at 1653. And the furthest out futures contract, which was December, was trading at 1552. A dislocation that is like, picture yourself playing sports and you dislocate your shoulder. Somebody's got to get that dislocation put back. Well, when you get a dislocation of the VIX index, that dislocation that has to come back is that spot VIX index is not going to trade above all futures contracts for very long. It's telling you that somebody's at the loony bin out there believing that was the case. It might look good, but what you've got to do, or what you should do, is recognize that that is one of the, how often that type of dislocation occurs out here. Now, we've seen it, you and I have seen it twice during the past year. That's pretty amazing because it does not happen often. You can count the times pretty much on both hands, maybe one of your feet. Yeah, in the history of these products. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 44. S&P is up 6. So let's go take a look at Goldilocks, up $4 right now. And so there's a couple of cool things that seem to be going on, at least as of 1:30. A couple of cool things going on. We'll just bring this chart over here because this is a weekly chart for gold. And what we are going to see, it appears, for the first time, we are going to see, and this is a trend line that was established right back here in 2012. So you'll see that that's from the highs inside of gold. And this trend line has held for quite some period of time. Now, unless there's some sell-off going into the close, you're going to get a break of the trend line. The Japanese yen happens to be on the bottom panel of my screen. Both of these are the continuous contracts out here. The yen hasn't broken through that. And because of the directional correlation, should the yen continue, the yen futures that we're looking at right here, should they continue to move higher, that would be, you want to keep track of both of these charts out here because the signals are important. At least I believe that they are important for being able to get you in and out of trades or understand what's going on. So this is a positive event that is taking place as we speak right now. And if we close above that trend line and we get some additional follow through, that is suggesting to you and I that the long-term trend in gold has changed. Yeah, the intermediate term trend in gold has changed. Subtle, but important message. Now, it's like any other breakout, may get tested. If it pulls back in, then it was a false break. But you have to read them and weep, so to speak, right? You got to read the cards that are being dealt to us, and this is one of the cards that has been dealt to us. Now, that's what's going on in the case of gold on that weekly time frame. It's just that trend line that is ultra important to you and I. We back up to the daily time frame out here. We did this yesterday. Let's go over there just in case some profile levels have changed for you. Where is that? No, that was might have been this chart. So let me do this. Let me get Goldilocks back up here. Oops, that was a Russell. So let me get Goldilocks and let me get rid of the 30-minute. Let's put the 60-minute up here. So we have these four dominant. Yeah. So it was the daily chart, and what we noticed, what you and I noticed was, hey, look. All that looks all hunky-dory, fine and dandy. But what we really know is on a daily basis, there needs to be also a break of a resistance area. So longer term, weekly, we have the break. Now what we want for the break dancing to occur is we must see gold close above $1,301, 1,300.6. The preference is obviously going to be really closing above the swing point high from the trading day of April 17th, and that is 1303.50. So let's call it 1303.50. If that occurs, in combination with what's going on in the weekly chart, that is a very bullish message. You can see the consolidation pattern out here, right? Your eyes see the consolidation pattern, and when you break a consolidation pattern, whoops, you got to grab the right tool. First of all, if you want to talk about consolidation patterns and you're going to draw them on the screen, make sure you grab the right tool out there. Otherwise, it's senseless. Now, so the consolidation pattern, if broken, that's that rectangle area out here. If we take a look at it, that's going to give you a measured move price projection. The approximate measured move price projection will be about $1,393. So we'll just call it $1,400 and just round it up. Now, that would actually get over the swing point from back here in November 9, 2016. So one checkbox looks like we can mark it off on the weekly. We now know the next checkbox that needs to be marked off as well. And when it comes to the and it's really what's now. So that's the bullish case. The bearish case is gold doesn't take out 1,300. We've really already had the test. It's not going to get up to 1,300 because what it did was it's tested the top of its weekly profile, and that's 1293.60. Yes, we got up to 1294.60. $1, Mortimer. All right, $1, and we've seen a rejection. And the way that box is set up, it says, you know what, I like traveling between the 1293 and 1253 area at a minimum. Bearish structure in that box. Hasn't been able to take it out. The other thing that we want to pay attention to, right, is going to be the yen. Now, let's just go look at the currency pair versus the futures market. For those of you that prefer to take a look at this, the bearish candle. Price is trading back into a swing point. So we've seen a 100% move of a move. Now, you know, and I know, because we've read the book, right, the book, The Art of Timing the Trade, we know that once something makes a 100% move of a move, that means come back to your prior swing point. Typically, the market does something else out here. So it's a reason. It's a reason for stalling. It was a last time where we saw the bulls really come in, nice bullish engulfing candle, June the 15th out here. We're looking at the 108.83 level. Breaking below that would be breaking out a level of resistance. It gives you this other swing point back here, but there was no real bullish signal April 17th or those next couple of days, so price would move back there. But breaking, just closing below 108.83 would be very promising. You could go and say checkbox number 2 with regard to where gold is going. What I don't know, and I'm trying to answer this question myself, is the yen going to continue to get stronger and bust through this 108 level? Is gold going to get stronger and bust through that 1305 level? I wish I knew. At this stage of the game, hey, subscribers and I, we got in right here. We got in on this candle right here, July 11th. What is today? Today is August 11th, so 30 days ago, right? We got in because we knew that price was coming up to resistance. We knew that red line that was out there. This was a key reversal. Turns out to be, it was a much larger bodied candle the day that we went ahead and took that trade. As long as it ticked down 1 to the downside, we knew we had a nice little, at least a key reversal session out there. And that's why now I'm evaluating. I'm saying, hey, man, prices come back to support. And I don't have anything really on my radar. Maybe somebody out there has something on your radar that says that it's going to bust through it, some tool, something or other. In fact, if you have a tool, you have a chart you want to share, and we can post it out here on the screen. You call in. We can absolutely do that out there. We are all interested in trying to find something new to add to our toolboxes out here. So I don't know. I won't belabor the point out here, but we have so many folks that do trade these vehicles. I just want to make sure you understand my thinking, and I don't have any conviction right now as to which way this is going to go. I just know that I have such an early entry price that I can sit back and wait. It's worth the reward because of the break that we're seeing inside of the weekly chart for gold out there. So that is that's that. I did ask a question. I did post a question inside the Tiger's Den. I will now post it to you live, which is, are the transports, which are up 1 3/10%, up 118 points right now, leading the charge, are the transports telling us something? What say you? When we get back from this break, I don't know the answer, but together we can go try to figure out what they're doing or what they need to do in order to give us a heads up what might be taking place next. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So before we went to break, the question was, are the transports telling you and I something? We know that the transports topped out first, if we'll call it, or made the high first and then started moving lower well before the Dow did. Here we have the high coming in on July 14th, the Dow just 2 days ago. It's Friday. 3 days ago. We'll just say Wednesday as the actual day. Now, my experience when we see divergence like that occur is that when the transports complete a pattern and start moving higher, they are communicating to us. They're telling us that, hey, whatever retracement was going on is over with regard to the Dow. I don't know if that's your experience. It's my experience. And go back and, compare the two on a chart and, one on the top, one on the bottom, or one on the left, one on the right, and you'll see that pattern is out there. So one thing that we know about the transports are that they have formed a Gartley buy pattern. So let's go take a look at it. Your A point out here, July 14th. We already discovered that. Your B point is on July 21st. And for any Gartley pattern, you have to have an A to B equals CD. And then July 25th was your C point. So it made between a 1-to-1 and a 1-to-1.272 out here. The 1.272 would have given you a price projection of 90.91. Now, we use these as price targets. We don't use these as, hey, you didn't hit it right to the point. Gartley, because we know that this was just simply a logical retracement from a move off the lows on May 18th to that July 14th time frame. If we take a look at that retracement out here, that was a 0.618 retracement. So you have a really valid Gartley buy. In fact, you have two of them. I say two of them because you had one that was confirmed on August 2nd and the 3rd. August 2nd because it was a piercing candle. August 3rd because it was additional follow-through. And now we're getting that same thing today because we have another, at least as of right now is 144, another bullish reversal candle out here. So we do know where the bulls are lined up inside of the transports. Now that's also helpful because we cannot suggest that we cannot say at this stage that there's not another A to B equals CD to the downside that's being formed. But we have a valid 0.618 Gartley buy inside of the transport. So they too are something that you want to be paying attention to come Monday for both sides of the trade out there. How will we know if it's the bullish side of the trade or likely the bullish side of the trade? Well, one way, we know that all Gartley buy patterns have 5 different outcomes. And so one of those outcomes, or the next outcome in this case here, or the outcome would be just simply getting to that 0.382 retracement. It hasn't done that. That figure you'd be watching for is 93.60. The 0.6 rate would be 95.14. You don't have to worry about 95.14 until 93.60 gets taken care of. If we didn't have a couple of this is a new day and age. The new day and age with regard to communication. This is done through 140 characters. You know what I mean? And other stuff. And so if we didn't have a lot of rhetoric going on out there, I'd be telling you that probably the best buy in the marketplace is this Gartley buy pattern that's now been confirmed twice. At least it's the right reward to risk out here, because outcome number 5 is this turns into an A to B equals CD to the upside. But I wouldn't give you that advice as we speak right now. I might be willing to if, in fact, we could at least see price close over Stevie's red line. That price is 92.5807. Now, it's going to keep changing. Just call it 92.58, 92.59, something like that out there. If, in fact, price is over to take that level, that's going to get you and say, hey, you're going to likely achieve outcome number 2 and 3 inside of the Gartley buy pattern that has set up here. But until then, price is just running into some stubborn resistance. How important is Stevie's red line? I had a listener who sent me an email a couple days back and asked what I thought was the most intriguing buy pattern out there. He was looking at sector rotation, this, that, and I said, well, it is the transports, because they are the ones that had confirmed the Gartley buy pattern. But then I also said, but not until price closes above that red line. It hasn't. It acted as resistance back here. Looks like that's either August, I think it's August 8th, acts as resistance. It is really important. No, it's not a moving average. You can't plot it as a moving average out there, but really important, and especially important because what I know and you know right now is this price oscillator is still turned down below 0. But if it turns back up, it's going to be sending you and I an important message out here. And if we do get those important messages, and if somehow something resolves, because all that the stock market is really looking for, it's looking for a glimmer of hope that this is going to be resolved and we're not going to have global thermonuclear war all over the place. That's all the stock market is looking for. It doesn't need to have a successful resolution to anything. It just needs to have some type of what it might think is a small victory. And if that occurs, then the bull market will go ahead and regain its strength, and just as fast as we made it to the downside, just as fast we'll make it back up to the upside. We don't have that information any more than we have what's going to go on inside of Goldilocks land out here. But what I am saying is if that does happen and we see the markets move higher, I guess what I'm doing is I'm providing you with a trade, a place to look. Okay, something that's solid with regard to patterns that are present in the marketplace. I don't know if this, in fact, is going to turn into an A to B equals CD to the upside. What I do know is that's the outcome. That is an outcome. That is outcome number 5. And now you're talking about 10,130.75. Now, you'd be trading like IYR or something like that. But I can tell you that your reward risk is very good, is very promising out there. Maybe it just makes it back to the highs, that 100% move will move. 97.63 out there. Even that has got the right reward to risk on it. So is the Dow Transport telling us something? Telling us right now that it is really trying to make a bottom and is trying to do it in a big way. I don't know that I can go to any other sector right now and find we do it on the 30-minute charts and the two-hour time frame charts, right, inside the NQ, the ES, and so forth. But that was a daily chart. And daily chart, rocks over a 2-hour chart. Much better to get your confirmed signal off of a bit of a longer-term time frame out there. Okay, so I don't know how we got into that. It was because of me. Actually. Well, so be it. Okay, so I don't know. What else do we want to look at? I don't see any other requests inside the Tiger's Den. We're going to go to break here in about 20 seconds. We know what we're going to be looking for the rest of the day. We're going to wait to see if we get a test inside the NQ of Stevie's red line. Right now it's at 58, about 11 out there. And a pullback to that and a bounce off of that line, doesn't have to be 58.12, then you probably will see some short covering coming into the close. And in the case of the NQ, you'll be right back up to 58.90 in an absolute heartbeat. In a heartbeat. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
S&P is up 6. What else do we want to take a look at? We haven't looked at any individual stocks. Let's go take a look at NVIDIA. Let's start there. NVIDIA down about $9 off 6% out here, gapping down. What's it doing? Let's go take a look at some profiles out here, some volume behind its move. So the volume today, about 30 million shares out here. It's daily boxes. That's what's going to print up on our screen first. You're below that. That's not necessarily a good thing. Weekly boxes. Apparently, I deleted them. So I have the quick solution. Let's just change the chart to a weekly chart out here. And now we go. So we can see that, well, one, you've got a, so if we take a look at just weekly Japanese candlestick charting out here, here's your shooting star. This took place on the trading session of June the 5th. And if we just simply go ahead and we take a look at that high, that sets up resistance, right? It's the opposite of a hammer. So that's 168.50. And today, this week, I should say, you now have a bearish engulfing candle. You've got a key reversal date as well, because the last week's highs and lows have been exceeded out here. And you're back inside the weekly profile out here. Volume-wise for the week, you're at 113 million shares, but you know what? This could be just nothing more than a sideways consolidation, because the week of July 10th, this went up with 130 million shares. So that says that price likely inside of NVIDIA is just traveling in between the 142. You know there's resistance. So closing above 168.50, and really you'd have to say really above today's or this week's high, which is 174.56, because that sets up what we'll call resistance level number 2 out here. You close above that and it's really off to the races. But likely, the downside action, the buy point, if you were looking to buy or add, is right now you'd have to say is in that 142 area. That is NVIDIA. Well, folks, I hear the music in my ears. That means I'm being cut off, and it's time for David White. He's up next to Tom O'Brien from 3 to 5. Have a fantastic weekend. We'll see you on Magnificent and Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.